A lot of things influence the stock markets, from policies to earnings. Everything triggers either a bull run or a bear bite, and sometimes it even remains untouched. The market performance in 2025 was very mixed, as the year gone by had so many changes in leadership, policies, and even trade dynamics. For India, a strong consumer demand, steady government spending, and the ongoing structural reforms helped the Indian markets at least remain resilient for most of the year. So now let's look at the overall market run in 2025. On a year-to-date basis, as of December 30, Nifty grew 9.7%. In the same period, sensex was up 8.36%. The top performing indices were Nifty PSU Bank, Metals, Financial Services and Auto. Now coming to the laggards, FMCG, Pharma, IT, Realty and Media were the losers. Now diving deep into the performance of the markets. In early 2025, markets began cautiously, weighed down by global growth concerns, elevated interest rates in advanced economies and trade tensions. Still, benchmarks opened the year on a positive footing. On January 2nd, the BSE Sensex stood at 78,507.41 points, while Nifty was at 23,742.9 points. In the mid-year, the recovery was seen, but the volatility spiked in April as Trump tariffs were announced, triggering a global market sell-off. In late 2025, volatility remained in the final months as foreign investors were selling off, rupee was under pressure, and uncertainty around global monetary policy and geopolitics was seen. Towards the end, in the final sessions, benchmarks declined. Nifty 50 on December 30 ended at 25,938.85 points and Sensex ended at 84,675.08 points. Overall, the market showed a neutral to negative note during the year. Now let's talk about what all triggered the markets this year. First, the global triggers. India-US tensions were weighing on the markets massively this year. Trump imposed a 50% tariff on India, including 25% penalty over Russian oil purchases. The India-US deal was also being dragged into 2026 now. Mexico too had imposed a 50% tariff on India on some exports. Foreign institutional investors too remain persistent sellers in Indian equities throughout the year, extending a selling trend that began in October 2024. The year turned into the worst year on record for foreign equity flows in India. FIIs were set to close the year with a record-breaking exodus from Indian markets, marking the steepest annual net outflows ever witnessed in India's capital markets. As of December 27, FIIs had sold equities worth 22,130 crore rupees through stock exchanges. As per Morgan Stanley, FII's positioning in Indian equities is now close to cyclical lows. Next was rupee volatility. Indian rupee remained volatile through December, slipping to record lows day to day, nearly crossing 91 mark per dollar, weighed down by strong dollar demand and sustained FPI outflow. Rupee emerged as one of the worst performing emerging markets currencies this year, hurt by US tariffs and weak portfolio flows. However, domestic fundamentals remained strong. 8.2% GDP growth was seen in the last quarter, that is June to September. India was still the fastest growing economy in this year. In the first half of 2025, the GDP growth was seen at 8%. RBI described the current macroeconomic environment as a rare Goldilocks phase marked by strong growth and low inflation, and India also achieved a milestone in October 2025 as retail inflation fell to just 0.25%. In November, though, it edged up modestly to 0.71%. With inflation under control, the RBI reduced the repo rate from 6.25% in the start of the current year 2025 to 5.25% this month. Big tax relief was also given to the middle class by the budget, lowering the the income tax, and GST also lowered, boosting consumer spending. So domestically, the fundamentals were strong, but overall geopolitical impact weighed on the market in 2025. So what's next for the markets in 2026? Well, most experts on ET Now say that they're bullish on equities overall. Market expert Sunil Subramanian predicts that equity markets on a broad basis should deliver double-digit returns next year, and the expectation is that it will be a reversal of trend where mid caps and small caps will likely outperform large caps in the coming year. He also says that if the trade deal between India and US is finalized, foreign institutional flows will also return strongly and boost export-oriented sectors too. A similar view was given by Nilesh Shah of Kotak AMC. He says that the gap between large, mid and small cap performance was wide in current year 2025, and it may narrow significantly in 2026. He says returns in 2026 and beyond will likely be driven primarily by earnings growth. So the bullish view is coming in for 2026, but you beware of false financial advice. Make sure to consult your financial advisor before making any money related decision. I will see you in the next video.
If you like this video, then like, share and subscribe to ET Now.